All right, in today's video, guys, we are talking about the New Zealand dollar and a potential opportunity that could materialize here in the coming days below a critical level, which you can probably see here on the chart, but we're going to talk through all the details in this video, including key levels and targets. And we're also going to talk about the DXY, which is trying to break out today, but is not quite there. Now, if you guys do want my help with your trading, including daily videos, exclusive charts and setups, and also my trades in real time, including the trade that I just put on today, be sure to click on the link at the top of this video, and that's going to give you 90% off lifetime access to the trading group and also the course. So this is a limited time offer. You can also see the link in the description of this video, or if you're on the website, click on that Join VIP link. Okay, so looking at the New Zealand dollar, we obviously have the market range bound here for quite some time. In fact, going all the way back here to the start of 2023, this pair has really just been sideways. Okay, so we're dealing with a range-bound market. This has been the case too for most of the forex market, at least the major currency pairs. And so that's what we're dealing with. I think it's important to understand this because if you're looking for some significant trends to develop over, multiple months, I don't think that this is the time for that, just because we are seeing the market very range-bound again. So looking at the New Zealand dollar, we also have some very clean horizontal levels here, including this one down here. So 60.50, we've talked about this before. And you can see that this does go all the way back here to 2023. And we also have this resistance up here, right around 62.16 to be exact. Now, the market, at the moment is trading right in the middle of these two levels. So what I'm looking at this week is the potential for this right here to become a topping pattern. Now, this is also very similar, or could be very similar, to what we saw back here in February, March, and even into April. So if you'll notice right here, these two retests are starting to look very similar to what we saw over here. Okay, so at the moment, this could be a very similar chart pattern to what we saw earlier this year, right before we got this sell-off. Now, the key to this, okay, and I want to be very clear about this, is that this is not the time, in my opinion, to be shorting this market. And the reason for that is because if you're shorting here, you are shorting into all of these lows. And that is not the right time to be getting short in a market when it's trading just above lows like this, because this is not guaranteed to play out. We could just see the New Zealand dollar, head higher from here and fill in some of these imbalances up here in this area. That's also very possible. So if you're going to look for shorts here, in my opinion, again, not financial advice, I think that you need to be looking for a sustained break below this area right around 61.05. Okay, so 0.6105. And again, this also looks kind of similar to what we saw back here. So no guarantees of this. And I'm not saying that it will play out exactly the same. It probably won't. But if you look here off of the closing prices, what you're going to notice is closing price here, closing price, lows through here. We got the breakdown, retest, and retest. Now, obviously, following that, we did get a significant move lower here from the New Zealand dollar, even a retest up here at 60.50 before another leg lower. So again, I'm not saying that this is going to play out the exact same way, but it is very similar to what we saw earlier this year following the retest of 62.16. Okay, so this is a possible setup that could materialize, tomorrow going into next week. Although, of course, if it does materialize on Friday, that's not something that I would trade because I would just wait until the next week. Because again, just my opinion, but when you get a breakdown, you don't want to short the breakdown. For example, if Friday were to close down here, you wouldn't necessarily want to be shorting that because you've got this area down here at 60.50 to deal with. So instead, you'd want to look for a retest to really capture that favorable risk to reward ratio. Now, let's take a look at the DXY because we are seeing the market trying to break out today. And this is also what we've talked about in previous videos, including yesterday's, where I mentioned that I was still cautiously bullish on the dollar. So you can see that going all the way back here to 2023. And again, this is why we have seen a lot of these major currency pairs just sideways here over the past year and a half, because we've seen this here from the DXY. Now, given this reclaim over here, okay, this was a fake out below this smaller channel. Okay, so given this reclaim over here on June 7th, this is when I told you guys to prepare for potentially a higher dollar. Now, obviously, we had, following the Fed, right, we had some volatility here, but the DXY did hold on to the bottom of this channel. So I do still think that, it's very likely that we see the DXY head higher over the coming weeks. Now, with that said, though, if you look here, right, 105.6, this has been the area that we've talked about over the past few weeks. So this was resistance last week, and you can see that once again, the market is finding some resistance here. So again, going back to the New Zealand dollar, this is not the time that you want to be buying the dollar, in my opinion, the US dollar, because if you are buying the US dollar, you are buying right into resistance. And keep in mind that if you short something like the New Zealand dollar, okay, you are simultaneously shorting the NZD and buying the USD. So do you want to buy the USD when the DXY is below 105.6? I wouldn't want to do that personally, but if we were to get a sustained break up here in this area over the coming days, then that would secure the breakout and expose those recent highs around 106.5. So just to kind of wrap up here, I think if we get the DXY basing above this area around 105.6, at the same time, we also get the New Zealand dollar breaking below this trend line down here around 61.05. If we get those two things at the same time, then I do think this starts to look pretty good for a short opportunity down there towards 60.50 with a break below that, exposing some lower levels, including potentially some of these imbalances down here that have developed right around 59.50. Now, alternatively, of course, if we see the New Zealand dollar just head higher here, and take out this high up here around 62.16, then that, of course, would negate the idea. And the same thing goes for the DXY. If the DXY were to rotate lower from resistance, take out this level down here, this channel support, so right around 105 right now, if we were to see this fail here over the coming days, then that, of course, would also negate the idea that we are likely to see a higher US dollar in the coming days and weeks. Subscribe to the channel and click that bell icon for notifications. Don't forget to, guys, claim your 90% off lifetime access to our trading group and also course. See the link in the description of this video, or if you're on the website, click on that Join VIP link. I will see you on the inside. Trade well out there, and I will talk to you again tomorrow.